The motorcycle industry isn't struggling anymore, it's unraveling. August didn't bring relief, it brought confirmation. The crash is now beyond control. All hopes of a seasonal bounce are dead. Inventory remains untouched. Buyers aren't coming back. Dealers are in panic mode. And the manufacturers, they've gone silent. What began in early 2024 as a modest correction has now metastasized into a full-blown collapse. Financial, operational, and psychological. Manufacturers can no longer stimulate demand. Dealers can't discount fast enough. Lenders are walking away. It's not just that the industry is shrinking, it's contracting violently, shedding layers by the week. The tone has changed. Even the optimists have gone quiet. There's no Q4 turnaround coming, no model year 2026 surprise. The truth is this: we are watching the largest and fastest motorcycle market contraction in modern US history. And it's not done yet. Infinite piles up, and riding season doesn't help. August is supposed to be the tail end of peak riding season, a time when bikes move, showrooms buzz, and dealership stock thins out. But in 2025, that's not happening, not even close. As of mid-August, more than 80,000 brand new motorcycles are sitting unsold in US dealerships. That number is climbing week over week. Some bikes have been sitting for 10 to 12 months, untouched, unfinanced, and untest-ridden. Discounts are everywhere. 25% off cruisers, $3,000 cash back on ADV bikes, free luggage, heated grips, extended warranties. Nothing is working. Even Harley Davidson dealers, historically resilient, are slashing prices by $5,000 or more and still can't move stock. Japanese brands are offering factory-to-dealer incentives just to free up floor space, but the metal isn't leaving the building. Dealers now face a painful reality. The season is peaking, but the demand never arrived. And when demand doesn't materialize during the strongest months of the year, it doesn't just signal a slowdown, it signals a structural collapse in buyer confidence. Financing. A dead end for most buyers. If someone does want to buy a motorcycle in August 2025, the first obstacle isn't selection, it's financing. The lending environment has gone from bad to worse. Average interest rates on new motorcycle loans now range between 12% and 14%, even for buyers with strong credit. For used motorcycles, rates often exceed 16 to 17%, and some lenders have withdrawn from the sector entirely. A year ago, financing was difficult. Now, it's borderline impossible. Loan approvals are tanking. Borrowers who would have qualified with ease just 2 years ago are now being declined or forced into predatory terms. 72-month loans, balloon payments, sky-high insurance bundling. Credit unions are tightening up. National banks have stopped issuing bike-specific products. One major lender reportedly shut down its entire powersports department in July. And for those who do get approved, the monthly payments are brutal. A $24,000 ADV bike at 13% over 60 months equals nearly $550 per month before insurance, registration, or gear. One misstep, one life event, and that payment defaults. As a result, more buyers are simply walking away before they even get to the negotiation table. Financing isn't just hard, it's killing the market. Manufacturers make drastic cuts to survive. In August, manufacturers moved from defensive to desperate. Harley Davidson has officially shut down its York, Pennsylvania assembly plant until further notice, citing excess inventory and a need to realign strategic focus. Honda has cancelled 2 model refreshes and slashed US imports by nearly 30%. Indian has implemented a second round of layoffs and paused development of all new cruisers for 2026. Yamaha is reducing US dealer allocations to bare minimums. Zero Motorcycles, once seen as a growth story, has pulled 3 models from its upcoming lineup and laid off another 14% of staff in August. BMW Motorrad has postponed its North American expansion plans indefinitely, citing economic volatility and margin pressure. These aren't seasonal pullbacks, they're survival tactics. R&D budgets have been frozen, marketing departments gutted, new model launches cancelled or indefinitely shelved. Factories that once ran multiple shifts are now idling. Even major OEMs with global operations are buckling under the weight of excess stock, slowing demand, and rising costs. The crash has moved upstream, and now even the manufacturers are running out of runway. Dealerships are shutting down, and nobody's coming to save them. If July was the beginning of a second wave of dealership closures, then August is the flood. According to the National Powersports Dealer Association, 64 dealerships permanently shut down in August alone, bringing the 2025 YTD total to over 180 closures. And that's just what's confirmed. Industry insiders say the true number is likely higher. The reasons are simple. Floor plan financing, the short-term loans dealers use to stock bikes, is suffocating operations. Bikes that once sold in 30 to 60 days are now sitting for 200, 300 plus. That means months of interest charges on inventory that's depreciating in real time. For smaller stores, the math doesn't work. Rent is rising, utility costs are brutal. Staff layoffs are accelerating. Some showrooms are operating on skeleton crews just to delay the inevitable. Even large dealer groups aren't immune. Several multi-location operations have shut down satellite stores, laid off service staff, and liquidated stale inventory at auction for a fraction of MSRP. Entire metro areas are watching their dealership footprint shrink, not gradually, but violently. In some regions, if your nearest dealer closes, your next option may be 150 miles away or more. Thinking of buying? Don't. Not yet. If you're tempted by current discounts, don't be. Not yet. What we're seeing now isn't a recovery, it's the beginning of the free fall. The desperation we're witnessing in August is moderate compared to what's coming in Q4. Inventory is still arriving from factory orders placed 9-12 months ago. Dealers are running out of room. Many are already converting storage space, renting off-site lots, or leaving crated bikes in shipping containers. Once riding season ends in September and fixed costs start to spike, insurance, storage, unsold units, they'll need to liquidate. Aggressively. Expect a new wave of markdowns starting October. $6,000 to $8,000 off big touring bikes, interest-free financing for 18 months, no payments until spring 2026, bundled gear packages worth thousands. Waiting 60 to 90 days could save you 30 to 40% compared to buying now. And on the used market, it's already crashing. It's not just smart to wait. In this market, it's financially reckless not to. Need to sell? This is your final window. If you're holding a bike and hoping to sell it, this is your last real shot. Private sales are drying up. Trade-in values have collapsed. Auctions are flooded with repossessed bikes being dumped at 50 cents on the dollar. Dealerships are refusing trades altogether unless they can flip the bike immediately. In April, you might have gotten $7,500 for your 2020 Cruiser. In August, you're lucky to get $5,000. By November, that number could fall into the low 4,000s or lower. And don't count on spring 2026 to bounce back. The bounce never came in 2025, and early market forecasts suggest next year may be even leaner. Sellers who wait will find themselves in a flooded, shrinking market with few buyers and even fewer serious offers. If your plan was to hold until prices recover, consider this. They may not, for years. List your bike now. Price it realistically. Accept less than you hoped for. Because by winter, that may look like a great deal in hindsight.